Greetings, Algo artisans. Wall Street versus the City of London.
That wasn't very nice. Now he's got to leave.
I will not tolerate such behavior.
Is Bitcoin the next battleground? We're going to talk about that right now. Before we get started, please like, subscribe, follow me on YouTube, follow on X, notification bell, all that stuff helps us get more content out to you. So we're seeing what looks like a bit of a rivalry between Wall Street and the City of London, and it seems to be spilling into the sphere of cryptocurrency. So just to give a little bit of history, Wall Street and City of London are the two financial centers of the world, Hong Kong being another powerful one. There are other centers, but it seems that Wall Street and City of London are pretty much in control, and a lot of that has to do with the US dollar being the reserve currency and the way that the rest of the world is kind of set up to trade. And to make this very simple, the deal was made after World War II that the US dollar would be the reserve currency. Countries would trade in terms of the US dollar, and they would then take those dollars, and part of the deal would be to invest them into the Wall Street, New York equities game, right? Well, it seems that a lot of this was also happening in the United Kingdom prior to that, and the United Kingdom was a major banking center. So in order to understand what's going on here, first of all, let's look at the new ramp up that Wall Street seems to be pushing against the digital currency group. Okay, this is an article from CoinDesk, and it says here, New York expands fraud case against digital currency group to $3 billion. An initial lawsuit accusing crypto firm DCG of cheating people out of $1 billion has been amplified by investors coming forward, losses tripling that, the New York Attorney General said. We'll scroll down a bit here. AG Letitia James now says DCG and Gemini are responsible for $3 billion in investor losses, boosting the size of her fraud lawsuit to the defunct Gemini Earn probe. The companies are accused of misleading investors by assuring their money was safe when that, according to New York, was not the case. So, long story short, people lost money, and New York is saying it's maybe a bit closer to $3 billion instead of $1 billion. And whether or not this is true, this is clearly a tripling really of the ammo that is being fired over at DCG. And to understand what might be going on here, we have to look at who owns DCG. Digital Currency Group has been accumulating crypto for quite a long time. And this is something that a lot of people don't know, but a lot of these other firms were sort of under a DCG umbrella in a certain way. When some of these crypto firms in the last few years were starting to have problems, DCG kind of backstopped them, and they have a lot of control. And the DCG is essentially, we'll say, linked to Davos. Okay, so Davos being the World Economic Forum and those types, and that is the European Power Center. And let's go ahead and take a look at who the WEF is, the World Economic Forum. Okay, so without going too far into detail, if you've been watching in the news what's happened over the past numerous years, the world's billionaires will all meet up over in Davos once a year at the World Economic Forum, and they are kind of a liberal side of things. You can see here that they bring together government, business, and civil society to improve the state of the world. That's their slogan, if you will. And just so you understand, whenever governments and businesses align with each other, that is a technical definition for fascism. Let's keep that in mind. And so what's been going on is you have, types like Klaus Schwab, who is basically sort of let's say like he's ran by City of London. It's said, I don't know all these people. I've never talked to them. But the rumor is that Lord Malik Brown actually runs Klaus Schwab, and he is powerful. Lord Malik Brown is powerful in the City of London Corporation. The City of London Corporation is basically its own entity inside of London, and they have their own rules, and there are rumors that the royalty has to either curtsy or bow or take off their shoes and walk in. I don't know any of that stuff, but it is said that they are the financial center of the old money in the world, and they're pushing a lot of the agenda, and they have some pretty interesting and close relations to the World Economic Forum. Now, what has happened over the past few years? Well, let's go back. Let's go talk about the euro dollar. Okay, so first of all, here's the City of London Corporation. The mayor and this is actually officially and legally the mayor and commonality and citizens of the City of London. It's a municipal governing body of the City of London, the historical center of London, and location of much of the United Kingdom's financial center. So basically, the history goes back really far, but essentially what happens is they're almost legally like a principality, right? They have a lot of their own rules, and it's kind of outside or inside or kind of insulated from a lot of the rules that are outside of the City of London. And I don't mean the actual City of London, I mean within their corporation. They operate kind of almost like how Basel operates in a way. So where you go inside of there and the rules are different, right? Over the years, they've been given a lot of power overseas when it comes to the United States dollar. There's something called the Eurodollar system. We want to know a little bit about that. You can see here, Eurodollars are US dollars held in time deposit accounts in banks outside of the United States. They're not subject to legal jurisdiction of the United States Federal Reserve. Consequently, such deposits are subject to much less regulation than deposits within the U.S. And historically, what's happened is, like, for example, there have been some Soviet-owned banks that would then sort of move their assets to one of these Eurodollar system banks so they could continue to operate. And of course, those banks would be able to avoid sanctions that way during the, during the Cold War and things like that. Well, what ended up happening with the Eurodollar outside the system, these banks were given the ability to create dollars through their lending platforms. And this is dollar creation that is outside of the purview of the legal regulation of the Federal Reserve, right? Now, this is the dollar of the United States of America. This is the U.S. currency, and you have entities around the world having the ability to create dollars that the Federal Reserve does not regulate, right? Think about the implications of this. This is a way to do a lot of things. This can cause inflation. This can give just a lot of power outside of our country and the ability to create problems inside of the U.S. by manipulating the financial system around the world. So, long story short, this kind of reached the peak during the LIBOR scandal. So, let's talk a little bit about that. A Eurodollar future is a cash-settled futures contract whose price moves in response to LIBOR interest rate, the London Interbank overnight, London Interbank offered rate. That's what it is. And so, basically, it says here, Eurodollar futures are a way for companies and banks to lock in an interest rate today for money they intend to borrow or lend in the future. Each CME Eurodollar futures contract has a notional or face value of $1 million through the leverage used in futures, though the leverage used in futures allows one contract to be traded a margin of about $1,000. So you're looking at 1,000 to 1 leverage on that. Let's back up a little bit. So the Eurodollar futures contract is actually a contract based upon the deposits we just talked about. So these Eurodollar deposits, and they're traded at the Chicago Mercantile Exchange. And so basically, with these dollars that can be created outside of the Federal Reserve's purview, outside of the regulation, this gives entities outside the United States a lot of control on the Chicago Mercantile Exchange with the Eurodollars futures. And there ended up being a LIBOR scandal, right? So this interest rate, which was vastly controlling the interest rate of the dollar, this was not handled inside of the United States, really. It was vastly affected by people outside of the U.S., and it became a problem because there was a massive scandal. So we're going to go ahead and look at the LIBOR, the LIBOR scandal, and it was a series of fraudulent actions connected to LIBOR. We just talked about that, and also the resulting investigation and reactions, how they refer to it. Now, the LIBOR itself is an average interest rate calculated through submissions of interest rates by major banks across the world. The scandal arose when it was discovered in 2012 that banks were falsely inflating or deflating their rates so as to profit from trade. Think about this. Chicago Mercantile Exchange is a place where you can trade with massive leverage, right? And if you happen to know which way the interest rate is going because you're manipulating it, of course you're going to make a lot of money. So it turned out these banks around the world were manipulating the interest rate through this LIBOR rate, okay? And then, of course, making trades to profit from that because they knew which way the rate was going to go. It says here that LIBOR underpins approximately $350 trillion in derivatives. It is currently administered by the Intercontinental Exchange, which took over running LIBOR in January of 2014. Okay, so that talks about the scandal. Lots of money made, lots of money lost. It was like one of the biggest, I think it might be the biggest manipulation scandal in history in finance, possibly. It's huge. So now, as a result of that, ultimately, the power was taken away, and now we have moved over to SOFR from LIBOR, okay? So the pace of the transition of the new, this is, by the way, let's back up a little. This is an article from The Street. It talks about a transition to SOFR, and SOFR is the secured overnight financing rate, and it's controlled inside of the United States. It says here, the pace to the new U.S. interest rate benchmark, the secured overnight financing rate, has picked up dramatically in recent months, with additional impetus coming from July's successful launch of the SOFR First initiative by U.S. regulator, the Commodity Futures Trading Commission. So CTFC now has the pretty much the control of the rate. The dollar interest rate movements, kind of in a slighter way, are not going to be manipulated outside of the United States. Not to say they won't be manipulated at all, but at least this does take the power away from entities outside of the U.S. to control this, okay? It says SOFR measures the cost of borrowing U.S. dollar cash overnight using Treasury securities as collateral. Same thing as LIBOR is now controlled inside the U.S. And they launched a SOFR-based futures in 2018 to support the transition, and I believe last year in 2023, that completed. Here it is. This is partly the result of the announcement earlier this year that any euro-dollar exposure where the start of the date is beyond June 30th, 2023 will automatically convert to CME SOFR futures, plus a fixed spread of basis points. So the financial transition has gone through, and the euro-dollar futures are no longer where this is all going to happen. And so, long story short, that game for people around the world, for banks around the world to continue to manipulate the interest rate of the dollar on an overnight basis is now gone. However, there still seems to be a battle between the two groups, and this is where it may be that we're seeing this battle with Bitcoin. Okay, so back to the original article. Long story short, it says here, now DCG is claiming, of course, there's no fraudulent activity. It's a baseless complaint to seek more press attention. We'll fight the claims aggressively. We will win. So DCG is saying, nope, nobody was hurt. Everything is fine. However, I think we got to take a look at the bigger picture here. If DCG is Davos, is City of London, is all of that, is Eurodollar centric, if you will, then this might be another rocket salvo fired, we'll say, from the US side of things. This is Wall Street amping up the pressure against DCG by tripling the value of this lawsuit with which they're being pursued. So this is an interesting development, and it might be just a way to try to, if you can ask for $3 billion instead of $1 billion, and you can in any way substantiate that, even if it's kind of thin and flimsy, you can amp up the size of whatever settlement might happen, or you're pushing harder to try to get a result. So again, we'll see how this battle goes. If DCG is backed by Davos and all that, which I have word that it pretty much is, then the legal defense will be paid for and very affordable and very powerful. But we are seeing this play out. It's already happened in the US dollar scheme of things, and coincidentally, we've noticed that the US dollar reserve currency has been decreasing substantially in the same amount of years, although this may or may not be related, right? So it does seem that Bitcoin may have a very important future because DCG, who holds a lot of Bitcoin, is actually being pursued right now. And it may be that the US is trying to take over control of coin. And we think over at Rogue it has to do with Bitcoin being the basis of a lot of the new derivatives, which we have now seen launched in the ETF form. So it may be that this lawsuit is able to kind of hold DCG in place and tie them up in court for so long that the US can go ahead and launch the ETFs and deal with DCG later. Now, I was told a couple of years ago that DCG needed to be dealt with before the US would release any major financial products related to Bitcoin, and it appears that this lawsuit is currently underway. It's like they didn't completely deal with it, maybe because they couldn't, and maybe because they needed to go ahead and release these ETF products because the bull run is coming. So now it seems as if perhaps dealing with DCG, now they're a little bit behind the eight ball. They need to make it happen. So I'm guessing that's why we have this $3 billion lawsuit happening when it used to be $1 billion, amping up the pressure, fighting a little bit harder, and it will be interesting to see how this goes. All right, I hope this is educational and helpful. Please go ahead over to www.algofactory.tech. We teach people how to learn how to trade in the first place and then to build a trading plan, and if they are interested, we teach them how to get on the path to building an algorithm that automatically trades for them. In the meantime, remember to trade your job and upgrade your life. See ya. All right, hope you enjoyed the show. Please like, subscribe, hit that notification bell. On the screen there you can see our website, algofactory.tech. Step that QR code to take you straight there. I'm also very active on X. That's algo_factory777. We got TikTok and Rumble. In the meantime, we hope to see you over at the website. Come on over, trade your job, upgrade your life. We'll see you there.